payments, and then there is a dollar bag, and it will take you to the club page where you can join the club. This is our latest episode in the founder series that we've been hosting, where we bring to you founders from across the world and try to learn from them the exciting things that they are doing in the fintech industry and their secret sauce of success. In today's edition, we have the honor of hosting Anuj, who is the co-founder for FREO, India's first credit-led neobanking platform. And we'll be discussing the hottest topic in the fintech world right now, which is neobanking. Thanks a lot, Anuj, for joining us.
Thank you so much for doing this. I think this is my first time on Clubhouse, by the way, and directly it's on this panel, so I'm pretty happy to do that.
Yeah, we can see that. If you notice, there is like a party hat on your image that says that you're new to the platform. So welcome.
Ah, I see. I didn't know that. Okay, thanks for telling me that.
Anuj, can I request you for a quick introduction for our audience?
Sure. This is an introduction to me or to FREO or both?
Introduction to you. We'll deep dive into FREO in a bit.
Okay. So my quick background is I've been an entrepreneur since 2012. Uh, 2012, I started the journey, and I actually launched in 2013 with my co-founder Kunal, who's also my co-founder in my current company. So he and I started a company in the talent analytics space in 2013. Did that till about 2015. Had a chance to exit that business, and then we started FREO. FREO was called MoneyTap before. We've recently moved on to a bigger avatar, and MoneyTap is a part of FREO now. Prior to being an entrepreneur, I worked in the telecom industry for 5 odd years with Bharti Airtel was my last role here in Bangalore. I was managing acquisition, sales, distribution product for them. And prior to that, I worked in the advertising industry in Mumbai. Yeah, that's my quick, short introduction.
Thanks, Anuj. James, can you introduce yourself? Are you in a place where you can talk?
Yeah, sure. Thanks, Anuj. So good afternoon, good evening, good day, everybody. My name's James. I'm one of the founders of the FintechAndPayments.Club. My day job is on the SVP for new payment platforms at MasterCard. So it's a division of MasterCard that does everything non-card. Previously been CEO of a business called Growth Street, a fintech in London. And prior to that, led digital banking and payments for Oliver Wyman across Europe, Middle East, and Africa. Great to have you with us, Anuj. Thanks so much for joining and having your first Clubhouse experience with us. It's looking forward to the conversation.
Thanks, James.
Over to you, Darren.
Thanks so much, Anu. Hi, Anuj. Very nice to meet you. So my name's Darren Franks. I'm based in South Africa. I run a executive search firm called Talent in the Cloud. We provide leadership talent to fintech and payments companies, predominantly across emerging markets. And I've been working with James and Anu and the rest of the team here at Fintech and Payments Club for the last 3 or 4 months, and it's been an epic journey. I've learned so much, and super excited to hear about your story, Anuj. So I'm going to pass back to Anu to carry on.
Thanks, Darren. A very quick intro about me. I'm Anuradha. I head the FP&A function for PayU, and I love talking about fintech, and that's why I'm doing this. Welcome to everyone. A few housekeeping rules before we begin. The format of the discussion will be that first 30 minutes will be like a fireside chat discussion where Anuj and the rest of the moderators on the stage will be having a discussion. And after that, we open it for Q&A. If you have any question or want to make a comment, please raise your hand with the hand icon at the bottom of the page. And one of the moderators can bring you on the stage to make your comment. If you would like to ask a question and for some reason don't want to come on this stage, we also have a Slido link. It's spelled as SLI.do, and you can enter the code FPCH. It's at the in the title of the room as well. And you can just add your question anonymously or by adding your name. We also have a poll running on Slido right now. Please take time to answer it. It helps us understand you better and curate content that you would like to hear. And above all, if you love what you're hearing today, press on the plus sign at the bottom of the page and bring on people to join the room, or you can share the link of this room with people who you think will be interested in what we're discussing today so that they can join in as well. Okay, with that aside, let's dive into the topic. Anuj, I'm going to ask a very basic topic to begin with. So around banking, right, especially the new age banking, there are a lot of terms floating around. Digital banking, neo-banking, open banking. Can I request you to put to rest this confusion once and for all? Is there any difference? If yes, what is the difference?
Um, Listen, it's very much like tomato, in some sense. Um, it's for a consumer, it should not be too much of a difference, but there might be some differences from how businesses view it, right? So digibank is essentially anything that is maybe an existing bank, which is very very digital, which probably like say DBS, for example. It's largely digital, very few physical branches. Neobanks are typically companies which don't have a banking license, and then they run on top of existing banks and they use their APIs and partner together to put it up. Open banking essentially is more of a it's business speak in some ways. It's wherein in some countries, especially like the UK, for example, they mandated opening up the banking APIs, and likewise in Korea as well, where the central bank ensured or rather forced everybody to open their banking APIs so everybody could build on top of them. So then people created open banking platforms where people could just come and say, I just want to build on top of this and use the existing APIs to create solutions for their end customers. But at the heart of all of this, it means the same thing. So, we can keep going on and on about the nuances of each one of them. But at the heart of it, it essentially means banking, which is not what your traditional bank is. So if your image is in whichever country you are in or whichever city you are in India, outside India, if your visual is of a traditional bank with branches where you need to, fill up papers and sign documents. I literally signed about 100 pages today for opening a bank account in my company. This true story. It happened today. And I signed on both sides, right at the bottom and on the side in case there's some mistake. So we could change it. So I just did that today. Uh, so if that is the image of a bank that you have, and then you put all of that on an app, on an easy convenience where you don't have to walk into branches, you don't have to fill in papers. Uh, that is what the end result of neobank, open banking, digibank will be. So the result of the all of these three is the same. And I said, that's why I said it's tomato, or tomato in some sense. But at the back, as you're building, there might be some nuanced differences between these three.
Got it. And where does FREO sit in this ecosystem?
We are a neobank, so we don't have a license as yet. So we work with existing bank partners. We've been doing this for about 5 6 years since 2015. We launched in 2016. So we started with the credit products, and now we are doing the entire suite of banking products, from deposits to credit cards to buy now pay later solutions to UPI and solutions on top of that, and of course credit. So we work with a dozen, maybe more now, 2 dozen odd partners at the back. So even for our banking product, which is the savings account deposits product, we work with a few banks at the back, and so we are sitting squarely in the neo banking category. Although in some parts of the world, in say Southeast Asia, the same model is also called a challenger bank or a digibank as well. So these are all different names coined in different parts of the world, but at the end result to the customer is probably the same, which is a bank on a mobile phone essentially.
Understood. So, just help us understand what is the problem statement that NeoBanks and FREO is trying to solve, which is probably not getting addressed by the traditional banks in the market.
Okay, checks for validation for KYC. And the third thing is that what's happening is that this entire cash is becoming digital very fast. So we're seeing this kind of a macro trend where if the cash is becoming digital across the board in multiple forms. Now, COVID is in some ways accelerating that for that matter. So now if you put all of this together and now you say that as a customer, I want to have all these products at a click of a button, wherein I do not want to go visit a branch. I do not want to maybe look at cash. I do not want to go and sign pieces of paper. I have a smartphone. I have my Aadhaar identity card. And I have all these needs from deposits and payments to insurance to wealth and to credit cards. So I have all these needs. Why can't all of these things be put together and given to me at my convenience? And that is what essentially neobanking is solving, right? So, if you have to go back a little bit in history, initially they were all public sector banks, like Punjab National Bank, SBI, et cetera, et cetera. Then the private sector banks came about and they ate market share into in the public sector banks by giving better services, better products, better pricing, better experience. They gave ATMs, they gave mobile banking solutions. Now, just by having a better product and a better service and better access, they ate at least 20, 30% of market share into the public sector banks. They took away market share. And that's what now happening with neobanks. Now they don't want ATMs, they don't want branches, they don't want all of this. They want all these services on a click of a button. So now the neobanks will sort of, in some way, take away share from both of them by offering all these solutions in a much more convenient manner. So I think the neobanks are solving for a very specific need, wherein today the world has moved digital, the cash is moving digital, the needs are moving digital, and everything is required to be while I'm sitting on my sofa, sipping a cup of coffee, and I want to be able to do it with a few clicks. And lastly, I think, at least the way we see it, is that a lot of customers and a lot of consumers have told us that, hey, I have a bank account with this company, the bank A, but I'm not able to benefit from that. Like they're not necessarily giving me a loan, they're not giving me a card, they're not giving me a insurance product or whatever else based on whatever I have a relationship with them. So we think that looking at customers' transaction, looking at customers' data, looking at customers' relationship with us, we should be able to give the benefit back to the customer. So he has a bank account with me, but looking at what he's able to do with his bank account, I should be able to give him at least 5 or 6 other products. And that allows the customer to have a long-lasting relationship with FREO. And that's the thing I think we are trying to solve for, or at least that's the aim of how we have come up with FREO and what our vision is.
Anuj, if I may, James here, a quick question for you. I'm kind of vaguely familiar with Moven and Simple in the USA and maybe Monzo and Starling more so in the UK. The model you're approaching FREO with in India, could you maybe describe what's maybe different about the model you're taking and the route that you're
Sure.
pursuing versus what I might have seen in the UK or the US?
Good question. So again, might be a little bit of a long-winded answer, but I'll try and crispify it. See, there are 3 broad models that we have seen across the globe, whether it be US or whether it be UK or whether it be Southeast Asia. So the first model is what we call is the payment-led neobank, okay, which is folks like Revolut or folks like Chime in the US, where they started by giving a specific payment service. Like Revolut started by saying, hey, I will help you, get you better Forex rates. Or Chime says, I'll get you money 2 days faster than what your checking account will do, right? So they all started by solving some payment related pain. and over time evolved into offering other banking services of their own or with partnerships with other banks and became a full-fledged neobank in some ways. So, or a digibank or a challenger bank, however you may call them. And those are essentially what we call as the payment-led neobanks. The second category, which we think exists in the market, like you mentioned, simple for that matter, is then experience led, wherein people are solving for a great experience on the app. So I will help you open the bank account in like 5 seconds, and I'll help you transfer the money in a jiffy, and no problem, all no questions asked. Customer service will be brilliant, etc., etc., etc. The onboarding process will be very smooth. So those are experience-led neobanks, wherein they say that I will be a neobank, I'll help you do deposits, but I will just create a beautiful experience. I think Monzo somewhere sits somewhere in between these two. Uh, and both these models essentially, they're at least as far as in India is concerned, both these models still don't have a monetization angle built in, because on deposits, at least in India, there isn't too much of a margin, right? Unlike some of the other countries where you make a lot of money on your deposits, there isn't too much of a margin on deposits. So experience led, or for that matter, in India, there are no, as you know, there's no MDR, or there is no interchange on payments as much as is there outside India. So these two models, unfortunately, while they get a lot of customers, they get a lot of good experience, don't necessarily end up having a lot of monetization models built in. What we have done is that we have taken the third category, which we believe is called the credit-led neobank, which is that folks who have credit solved for at scale, they have monetization that's built in from day one. But that is from a business model standpoint, right? So I have credit for under MoneyTap as a brand name. I've been doing it since 2016. We have about 4,000 crores of money disbursed over the last 5 years. So we figured that piece out. So I'm not worried about the credit part. But that's from a business model, right? From a consumer, why does the credit-led neobank make sense? So our approach is that, like I was telling you, that there are so many, 500 million, 600 million people who have, bank accounts, but they're very underbanked. They're not able to utilize the money that's sitting in their bank accounts. Like 60% of deposits are in public sector banks, 30% are in private sector, but they're not able to do anything with their deposits. So when they come to FREO, we believe that we will help them build their financial profile over time. We will help them build their credit profile over time. We will help them create a score that will allow them to get better products from FREO and maybe even from other companies as well. So if you deposit money with us and build your profile with us, over a period of time, we'll allow you to come into the formal financial ecosystem. So that's what we call as a credit-led neobank. So it's from a customer standpoint, it's a win-win. And from a business model standpoint, monetization is built in. So that is the way at least we look at it in India. So to summarize, across the globe, there is payment-led model neobanks, there are experience-led neobanks, and there are credit-led neobanks. And we squarely sit in the credit-led neobanks, both from a business model standpoint and from a customer standpoint. And you see this playing out across the board, right? So if you look at Nubank in Brazil, they started with a credit card in 2013. 2017, they launched their own bank account. So now they are a credit-led neobank because they have credit at the heart of it. Upgrade in the US did a similar thing. Tinkoff in Russia, very similar. Kakao Bank in Korea, very similar models where they started with a bank and built credit on top of that, which has got monetization and revenue built in from day one.
I love that reply. Thank you, Anuj. That makes it very clear to me, and it feels like you're kind of leapfrogging straight to the answer in the way that some of the other two models maybe are going to take their time to get there. So it makes a lot of sense from where I'm sitting, given what I've seen elsewhere, where frankly it feels like a lot of retch and no vomit, right? No one's actually getting to the ask, which is how are you going to make money, how are you going to be profitable, how are you going to be a sustainable business model. Yeah, it makes a lot of sense. Thank you.
Yeah, I think, it's you will get customers at the end of the day, I guess. If you have today having a great experience, great customer experience, CX, UI, UX, it's now table stakes in some ways. And it's you need to differentiate yourself out there. And the central bank also asks you, right? why should you get a second, third bank account? And they'll pull up the banks and say, why are you partnering with fintech A, B, or C, and it's just creating more and more bank accounts? What's the benefit of this? So when you have a credit-led model, it's very easy to say that these customers are building their profile over time, and they will come into the formal financial ecosystem at some stage. And so it's a little bit of a win-win across all the sides. So just having customers is, it's important, but it's not sufficient.
Thanks, Anuj. For the audience, if you have any questions, please raise your hand. We'll start taking audience questions in the next 5 to 10 minutes. Just want to pause and see if anyone else on the stage had a question before I move on. Okay. Moving on, Anuj. So you did touch upon a little bit on licensing, right, and regulations.
Yeah.
So currently in India, we do not have like a digital banking license or a NeoBanking license, unlike a lot of geographies. Do you see this as a roadblock, and how do you see this, pan out in the near future?
No, I don't think it's a roadblock. Today, for example, some of the banks are already giving APIs and partnering with fintechs, right? So people will start building on top of that, and then my belief is that the regulator is looking at it very closely, and they will come back with some sort of licensing. They've recently announced on tap for SFBs, that small finance banks. They have done something with the payments bank some years ago, wherein you had Paytms and FREO and all these other guys who got payment bank license, Airtel. Our regulator, by the way, is very, very progressive. If you look at it across the globe, we are probably the most progressive regulators across any other industry for that matter. So I think it's a matter of time where they will take cognizance of this and then help and give out licenses. But it probably will come with all kinds of riders, right? So today, for example, I have my own lending license. I have an NBFC license. So, but it did not, it was not easy. Like, you had to prove that, you can run a business. So if we are able to work as a neobank and then prove that we can run consumer businesses, manage consumer expectations, all the customer complaints, run credit, run deposits, then I think when the licensing does open up, we should be able to stand in line and they'll hopefully, look at us kindly. So I don't think licensing is going to be an issue, at least immediately. And RBI will probably have some kind of, they'll come up with something that will allow this to flourish a little bit more.
No, I agree with that. RBI has been very progressive with all the regulations around fintech, and I think the requirements, the criteria that it puts in is actually good for the consumers in a way. So I'm really looking forward to what they think about digital banking, and I think they have put together a committee that's been currently evaluating this. So a lot to come on that. With that, we are almost at the 30-minute mark and time for a room reset. After this, I'm going to hand it over to our participants on the stage for their questions. Yes, welcome to those who are just joining. We are the FinTech and Payments Club. We host different rooms on the different topics of fintech across the week. And if you are not a member of FinTech and Payments Club yet, do click on the house icon on the top of the room to join the club and not miss out on any events in the future. Also, if you like what you have listened so far, please press the plus icon and invite more people who you think would like the content that we are discussing. Also, we have another poll on Slido running right now, so please take a moment to answer that. It just helps us understand you better, helps us understand the topics that you want to know, the timings that you prefer, and we can curate content around it. Okay, with that, over to you, Sarah. You had a question?
Yes, thank you, Anuradha. Hi, Anuj. I have a very quick question. Right now, it seems, as you've kindly explained, it seems that in India, there's plenty of space for the credit-led neobank to flourish, considering the number of people that are underbanked. If we fast forward that by a few years, maybe 5, maybe 10, I don't know, where the credit worthiness of those people has been discovered because the FREO of India have started lending to them. And I know that there are tons of credit-led digital lenders, even if they don't call themselves neobank today. There are plenty of digital lenders in India. How do you perceive the cost of funding advantage that the neobanks like you will have in a few years when the credit worthiness of the end bank has been discovered and the banks still enjoy the bulk of the deposits and therefore enjoy lower cost of fund? Is there a model that you have in mind for a sustainable long-term either partnership or competitive advantage compared to the incumbent banks? Thank you.
Sure. Listen, the digital lenders, and I have been one for the last 5 years, and my digital lending arm that's called MoneyTab will continue to be a part of FREO. So, like I said, we're one of the largest digital lenders in the country, and that part will continue under FREO. So when I get deposits over a period of time, as you rightly pointed out, my cost of funds will reduce. And I'm not necessarily fighting with the existing HDFCs of the world or the ICIs of the world who have at least 5 or 6% cost advantage on their cost of funds, right? So if I am X, they are X minus 5 or X minus even
Sure.
8% on their cost of funds. So I'm not competing with that. I have a market wherein the bulk is sitting in the middle class, middle income group who are not getting credit from any of these sources because not everybody needs, say, $5,000, right? A lot of these guys sometimes need $100, $500, $1,000, $1,500. And these big banks, they are busy servicing the top of the pyramid, right? They're servicing, going after the 5% people in the country. So I can't compete with HDFC Bank for those 5%. 100% I cannot. But then there is the entire 40-50% in the middle, which is wide open. And those guys are not necessarily getting, getting loans at say 12%, 15%. They are getting at 25%, 28%, 30%. And there's a large enough market for me to play in that. And getting deposits allows me that if I can reduce my cost of funds, I should be able to pass that on to these consumers. So instead of getting at 20, I can get them to at 18 or 17 for that matter. And secondly, I think the data that you generate by having an integrated solution, which unfortunately and maybe fortunately for us, these traditional banks cannot do. I can look at people's behavior across products, and under one login, if I'm giving them 5, 7 different products, and I can use track behavior across all my FREO products for that same customer and give the benefit back to the customer that here is a better loan product, here is a better credit card, here is a better pay later solution. I can only do that, which is using a lot of product and data thinking and technology thinking in the center. So there are going to be multiple advantages for me, even for credit, as I can underwrite the customers better on the data that I've gathered, and I'll be able to pass on better credit just by reducing my cost of funds. And I really don't need to reduce it to such a large extent where I start competing for the top 5%. I am very happy having a higher cost of fund, and competing with folks who are targeting the same middle income, middle class customer.
Thank you. Super clear. Just maybe one point of clarification for me. You're a non-deposit taking NBFC, is that correct?
Yeah, so there are two types of NBFCs, which is a deposit taking and a non-deposit taking. That's right. We are a non-deposit taking NBFC. There's only one or two guys in the country who have deposit taking, which is one of them is Bajaj. Mm-hmm. So yeah,
okay.
But it looks like maybe they are becoming a bank soon. Who knows?
Thank you, Anuj.
Thanks, Sarah.
Thanks, Sarah, for your question. Next up, Dharani. And after that, I'm going to just take up a few questions from Slido. So over to you, Dhani.
Hi everyone, I'm Tharini. Anuj, my question is, you mentioned this is like a credit-led neobank, which means it's going to allow people to get access to credit. My question is a little bit more about, being a fintech startup. I think the culture having, the employees need to have a mindset of getting the money back or understanding the value of people paying the money back. And how do you inculcate that at FREO X Money Tab?
Sure, Dhari. Let me answer if I got the question right. You're asking me how does the culture reflect the behavior of getting money back, especially if you want to be a credit-centric, credit-led neobank. Did I get the question right?
Yeah, and not just culture. I'd say how does it seep into people's DNA?
Yeah. Uh, Listen, I don't want my entire organization to become a collection agency. If I wanted that, then I would have probably started a collection agency, but that's not what I want to do. I think credit has two legs to it, which is ability to pay and an intent to pay. So a lot of the work that we do is evaluating both ability and intent, and that defines what is the whether the money comes back or not. So what I really want to ensure is that how can our product data and tech teams make it so brain dead simple, wherein you are able to evaluate both these parameters without paining the customer, as most of the the process today, unfortunately, we have to take like 10 pieces of information from the customer. But how can product tech and data help customers and help evaluate customers on both these parameters, wherein then the collection point is already taken care of? So I don't think it's a question of having a collections mindset as such, or or rather what other processes. For that, there is a separate team that we have. I think that's okay. But the innovation will be required to, wherein you are able to develop products wherein collection may not be even required, and that is part of the value propositions. For example, if you pay back, then you are able to get A, B, and C, or build your profile to A, B, and C level, or get something back in return, which automatically ensures that good behavior is inculcated. And that is probably the holy grail for all my product managers and my product team in FREO.
Thanks, Anuj. That answered my question.
Okay, thanks for that, Dharani. I'll take one question from Slido. We actually have a lot of questions going on Slido, so I'm going to try and summarize it. So, Anuj, the question is around the credit industry. So, how are you seeing, say, the scope of BNPL and regulations around it, the risk around it?
BNPL is buy now, pay later. I'm not sure what is there a regulatory risk on it, because Bajaj has been doing buy now, pay later for the last 30 years. They are the kings of buy now, pay later. It was just called consumer finance or white goods financing or purchase financing in the yesteryears. The fancy word these days is buy now, pay later. Uh, so I'm not sure what is the regulation here. It's great for the customer. Customer does not have to pay any interest, and the merchant and the brand that's being sold, bears the cost of financing. So there doesn't seem to be any regulatory risk on this one. So maybe I'm not getting the question correctly, but I don't see any issue with the regulation with BNPL.
Now, got that. I think with that, we'll move on to Rahul. Rahul, you can ask your question.
Yeah, hi Anuradha. Hi Anuj. Uh, so Anuj, I have a question. I'm a banker, and I'm also supporting a lot of neobanks for their initiatives and use cases all across in India. I just want to know one thing. What is the point on the curve, time curve you see that when banks will do the same stuff you are doing with account aggregator coming in, a lot of facilitation, a lot of regulator support is also coming in, and also association of banks, or we are seeing in a blockchain at least, is coming up. So how do you see? Yes, there are jitters. I can surely tell you that upfrontly.
If I can just piggyback one more question on top of that,
Sure.
uh, fintech and banks have been working together for quite a bit. So, how do you see this neo banking solutions and the traditional banks? What will be the equation between them?
Yeah, listen, there's a lot of, this is one of those, I'm sure most of you guys are following the cricket match, and, sledging happens all the time, right? So there's a lot of talk about fintechs will eat the bank's lunch and banks will get completely wiped out, and banks saying that, boss, who are you to tell me? So this has been going on for quite some time. And this has been going on across where some of the fintech markets are pretty mature, like in the US. It's also been going on for quite some time. There's no doubt that there's a lot of value that has been created by fintechs by taking very specific some one portion of a bank's revenue and doing far better work on it, and taking that revenue stream away. But the banks are powerful enough to even lobby, for example, to ensure that it's not, there's the regulation around it where the fintechs end up working with banks. So our our belief is that it's a pretty symbiotic relationship between banks and fintechs. Both play a role. What the fintechs do, banks cannot do. What banks do, fintechs cannot do. Of course, they can do if they want to, but it's not just in their DNA. So there's a certain culture and certain DNA that fintechs have, which and they're good at. And I think both of them have to leverage each other. We work with RBL Bank, for example, when we launched in 2016, we worked with RBL Bank, and they call themselves, partner ka bank, and they are very clear that we will work with a lot of solutions out there and build their portfolios, and it served them very well. So if banks, decide that there is a way to work with fintechs, and fintechs are able to appreciate what the banks bring to the table, I think it's a great relationship for the future, because smart people are there on both sides. It's just that there is the areas of where people are, putting their effort in is different, right? We met so many of the bankers. They're super smart. They know how to run businesses. They know the pulse of the country. They know consumer. They understand what the how to manage regulation and what will work, what will not work. And fintechs manage technology, data, experience, consumer thinking, brand building. So a lot of that stuff is, it's very, very complementary. So I don't see anything going away anytime soon. Yes, there'll be some shifting of market share here and there, but I don't think it's like one of those doomsday scenario where one will kill the other. That's not going to happen.
Thanks, Anuj. Actually, we had a poll around this Sunday on our room, and you
Oh,
reaffirmed what the results were.
I see.
Moving on to Ambika.
Hi, Anuradha. Hi, Monica James. Thanks, Anuj, for joining us. You have such a thorough understanding of the financial ecosystem, so I'm really learning. Thank you for giving us your knowledge. So I have a three-part question. I'm based in the U.S., so my mental reference is the fintech industry here in the U.S. So the first question is from a perspective of a business lens. You mentioned that banks are able to appreciate what fintechs bring to the table. So the question is, what do the fintechs bring to the table, especially given that you're credit first? So are you, for example, holding these loans on your balance sheet? Are you securitizing these and the banks are buying them? What is it that banks appreciate about fintechs in India?
Okay, thanks, Ambika. When I meant what fintechs bring to the table, I was talking more about a little bit of generic behavior. And let me answer that after your second question, which is specifically on credit. So, as far as credit is concerned, unlike in the US, securitization is not as big in India, at least with the fintechs. There are people who do it, but securitization is not very big. And in India, you can do both. You can lend on your balance sheet and you can lend without your balance sheet as well. So we have our own lending license. So we do on our balance sheet, and we have worked with balance sheet providers like all the banks in India and NBFCs in India, wherein they provide the balance sheet and then we share risk and we share reward equally. So the point being that there is a model that we have propagated or at least perfected over the last 5 years to whatever extent we've perfected. But we've grown to a very large extent where, like I said, we have upwards of what, $600 million of money disbursed through our platform, and all that's happened via working with partnerships and banks. So it's our model is wherein we work with bank partners and use their balance sheet, because the leverage that we are able to get is far more than putting your own equity capital and then leveraging that to get debt. So the ROEs make far more sense than anything else if you're able to do that. But there's a cost of that. The cost is you have to work with partners, you have to keep them engaged, you have to grow with them. If you don't run the business in a proper manner, they can shut off your capital supply. And in our business, capital is the building blocks of what we do. So it's not easy, and I think we have perfected that art, at least in managing banking partnerships and scaling with them. And let me come back to the first part of your question, which is what do fintechs bring? My response was more on the DNA and the culture side, which is we bring in consumer thinking, we bring in technology, we bring in data, we bring in leveraging technology and data for the betterment of the customer. Today, if you're following the news, half the time, banking apps are like, going out of, people can't access it. Uh, while banks may have their own application or whatever, they have some digital banking interface, but a customer does not get any benefit from having one product or another. So if I have a bank account, I don't necessarily get the benefit of getting a credit card. If I have a credit card, I don't necessarily get the benefit of getting a home loan, because the data at the back end is not seamlessly integrated and mined. So we bring in a lot of consumer thinking, consumer first empathy in terms of what they want. How do we use technology and data and product thinking, most importantly, to put all this together? So I think it was more, my answer was more on the DNA and culture side when I was saying that this is what we bring to the table.
Got it. So would it be fair to say this is more of a risk sharing model, given that they're providing you warehouse lending lines?
Yeah. So we do a risk share model in India, and we do that pretty well. So there are flavors of risk share. They could be, you could take zero risk, you could take 100% risk, you could take something in between. So yeah, we do a risk sharing model.
Got it. And could I ask one more question, Anuradha?
Ambika, can we go around the stage, and if time permits, I'll come back to you?
Sure.
Okay, Sanjeev, you can ask your question, please.
Yeah, thank you, Anuradha. Hi, Anuj. I'm just curious. I think you've addressed some of these issues, but I'm more curious about your business model, mainly from the perspective of that, as you mentioned about like partnering collaboration with the bank. I think from my perspective, that's by the default design, where the new banks are not given full 100% leverage or freedom into the the digital space by the regulator. At the same time, I think the challenges I see from the at least in India, little that I know. Actually, I'm from Nepal, so but I have had multiple interaction with the name of the bank that you had mentioned. So in that space, the cost of transaction, the UPI. So how are you achieving your economies of scale, and by how the business model would how are you running
Sure.
your business?
Sure, Sanjeev. So our business model is very straightforward. We are a neobank. We get customers for deposits, credit cards, loans, credit lines, pay later solutions, insurance, etc., etc. And we take the risk and we share it with our bank partners. But we manage the customer expectation. It's our brand out there. We decide what the pricing is, obviously in accordance with our banking partners. But the decision is ours, the customer is ours, the process is ours, the experience is ours, the support is ours. So it's not just a lead generation that I'm doing for a partner bank. That's not the model we are in. So and then whatever product or service that the customer takes, because I don't have branches and I'm able to get economies of scale, I'm able to pass that on to the customer. And with a better experience, I'm able to sell many products to the customer, and I take a share of it, or the bank and us divide a share. So it's actually as straightforward as that.
But in the asset side, you are leveraging on not in your balance sheet, right? It is your partner's balance sheet that you are leveraging on.
Yeah. So on the asset side, yes, the partnership is with the bank partner whose balance sheet I'm leveraging, but we agree on risk sharing models, like I was explaining in the previous question to Ambika, that it is a risk sharing model. So we partner on the upside and on the downside. So we make money from there.
Yeah, thanks, Anuj. Helps.
Thanks, Sanjeev. Soham, over to you.
Hi, Anuj. I have been in the banking as well as the fintech space for around 17 years now. I have a query which I wanted to request from you.
Sure.
Don't you see fintech replacing bank over a period of time, specifically in the consumer banking space, where your dependency on the bank for your loans from the bank or the sharing the balance sheet would be negligible or would almost be nil?
Um, in the in the long term, I don't think so. Like I explained earlier on, this is a this is it's a relationship of equals in some ways where we all bring in our strengths to the table, and I think together we will grow better. There'll always be issues. For example, the bank partner or the NBFC partner will say, use my balance sheet. Or tomorrow, when I have my own NBFC license, they will say that you're taking those customers and putting them on your balance sheet. But the market is so heavily underpenetrated that it's not like in Korea, for example, there are like about 8 bank accounts per customer, right? India, there are about 800 million bank accounts, or half of them are not active. And for the balance half who are active, they are about 60-70% are in public sector banks. So they're not able to do anything with them. So the market is so heavily underpenetrated for, as a unified banking solution that I don't see this happening in the next 5-10 years. Maybe after that, but a little bit difficult to soothsay what's going to happen after that.
Thank you, Anuj.
Thanks, all.
Thanks, Soham. With that, I think last question for the day. We are at the tail end. But just before that, we have another poll running on Slido. Do let us know the time that you would like to attend our Clubhouse events. Like I said, it helps us schedule better. With that, passing over to Monica.
Thank you so much, Anuradha. Anuj, it was a pleasure listening to you, and especially because you actually did not use any jargon. So this is something that I'm sure that product managers should also learn, which is how do you really simplify and actually oversimplify, which I really love. Thank you so much. But Anuj, I have I have a question which I'm sure that a lot of people do have, specifically coming from the fintech side of the world and not the banking side, which is that as you know, lending is just a feature, and everybody is building a lending business, be it a fintech, be it a bank. Banks have always done it. So the question becomes, when you talked about the neobank segregation, the way you have described it, how do you see yourself in terms of the competition, in terms of not only being able to differentiate yourself, but being able to really go after a micro target segment instead of a macro, which banks tend to aim for, because that is what neobanks specialize in? And how tough is it?
You are, you're pitting me against a lot of debate that's happened over the last few years, which is lending is a feature or lending is a business. So it's a little bit of a controversial topic. That my belief is very straightforward. It's a business. It's not a feature, and otherwise everybody would have done it by now. And not many people are actually doing it successfully. Unfortunately, or fortunately, however you look at it, a lot of people have uh, you know, lending is a lot about discipline, and I think COVID has sort of, in some ways, exposed if there was any, practice which was not good, and I think it's been a lot of people's eyes have opened up in terms of how to do it properly, I guess. So I'm not sure if it's a feature, and therefore it should always be a business. And on the other question of whether neo banking in terms of disaggregation or not, and how I look at competition, I think. See, there are not many consumer neobanks in the country. There are maybe about 3 or 4 of them. One of them has launched. The other two are in the process of launching. We will launch very soon. So I don't think there's a challenge. But like I said, there are only about if there are only about 2 or 3 consumer neobanks, and then the market is so wide, it'll boil down to what each one of them has. What is their secret sauce? So, like I said, most of these guys that are there in the market, they have a great experience, or they have something to do on, say, wealth, or something to do on say, making a better search on your personal finance or what have you. So these are some of the models that people are trying. We have taken a model of credit because that's our DNA for the last 5 years. So who knows who will succeed? We believe our model will succeed, but there aren't too many in this space in India at least. There are a few on the consumer on the SME side. Razorpay has recently done. There are a couple of others, but on the consumer side, there aren't too many, and so I don't see that as being too much of a challenge. Everybody's taking their own approach, and I guess we'll find out who's doing better or who's not in the next few years.
Wonderful, Anuj. And this is a long, one of those big debates that never settles. But I'm glad that you actually settled this for me. And Anuj, please pass on my regards to Sanjay. I hope that you will finally find a way to get him on Clubhouse and actually spend some time here.
You're talking about Sanjay Swami?
Yes,
Ah, I see. I'll tell him.
thank you.
Thanks, Monica. Okay, one last question before we wrap up. Ambika?
Oh, thank you. Yeah, Anuj, I wanted to also touch base on your tech platform. Could you talk more about how is your proprietary platform differentiating from the other neobanks in India? Again, my reference point is always the United States, so I'm not very familiar with the space in India. But I'm curious to know, like, for example, do you have the fastest time to submit an application? Or do you have, like, different personalization methodologies to, like, how to get different type of interest rates furnished for the customer? So, like, could you talk more about your platform?
Sure. I think what you're asking me is more on the what's the power of the platform for the end consumer, and then whatever's at the back end is what's at the back end. So
Yeah.
we are able to do all of this ourselves. By the way, like I said, uh, what in our we control the entire journey from acquiring the customer to underwriting the customer, doing the entire KYC on the app itself, to approving the customer, managing his entire finances, showing the entire, whatever a core banking system is able to show to a customer, we'll be able to do that on our app. Uh, and I don't know whether we are the fastest or not, but we will be as